to the best of our ability, by estimate, every $1 billion in TVL translates to approximately $3 billion in revenue to the protocol.
Nothing said on the Edge podcast is a recommendation to buy or sell tokens or securities. This content is for educational and entertainment purposes only. Nothing shared here is financial advice.
Welcome to the Edge podcast. I'm DeFi Dad here with Nomadic. Today's show features the co-founder and CEO of Pendle, Tien Lee. This is our second episode in our new series called Revenue Meta. Tien, thanks for joining us. How are you doing?
I'm super well. It's been a good start to the year. Thanks for having me.
So you just mentioned before we got started here, you hiked Kilimanjaro. So that's a hell of a way to kick off the year.
I'm really glad I did it. And I'm really glad my wife was there with me, my brother as well. Yeah, I'm just not so sure if I want to do another hike this year. Maybe we'll give it a break and then get back to work. But otherwise, feeling really, really recharged.
If you're like, gentlemen, by the way, I do have a wife.
Yeah,
I know
one
not
of the
everyone
only
in
members
crypto
of
has one of
crypto.
those, but I have a wife.
She's a real lady. So yeah, I was thinking about this before you got on. This will be your third time on the show. The first two times were more our longer format, and we've actually had Pendle on. It's almost 6 times if you include our Yield Talks format. So you've been on the show a lot, but even still, I think it's worthwhile just taking a quick step back before we get into all the revenue stuff and looking at the two different business lines that accrue to the Pendle token. And more big news on the Pendle token that we'll talk about a little bit later in the show. But yeah, take us to maybe a 30,000 foot view. What is Pendle V2? What is Boros? They're two kind of separate things, just high level to start.
Yes. So Pendle ultimately is a rate trading product. And so we have, at this point, 2 products, V2 being the more, the one that has been around for a longer period of time. It popularized the PTYT concept. Effectively, it allows for, on the one hand, users to obtain fixed rate by buying a principal token. And then on the other hand, it allows for users to speculate on the yield by acquiring that yield token. So the more popular use case for V2 is the points trading. So this was something that became a lot more commonplace at the start of 2024. And it's still one of them. It's a more popular use case for Pendle V2. Now, the other product, Boros, is about 5 months old, also working around the same premise to allow rates to be traded for fixed rates and floating rate swaps. Boros use cases focuses more on funding rates. Generally, as of now, it's only for funding rate, but generally, I think Boros is a more suitable instrument for the speculation of rates that fluctuate within a very small band. So, for example, POS staking yield could be another category of rates for us to work on, and then overnight funding rate, etc. But the main difference between these two, I would say, revolve around the use cases. So with V2, most people know it to be the points trading vehicle. With Boros, it focuses on funding rate, and the main difference here from technical standpoint is that it allows for margin account. Because of the margin account, users can also adopt leverage on their position. So it's more capital efficient.
Accountable is the new standard for real-time financial verification. In crypto, financial health still runs on screenshots, lagging audits, and blind trust. But Accountable changes that. Powered by the Data Verification Network, it proves assets and liabilities privately across wallets, exchanges, custodians, and banks. Accountable already secures over $2 billion in verified assets across 115 chains and over 90 data sources. To learn more, go to accountable.capital. Grow wealth exponentially. With Toros leverage tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With Toros, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. Toros reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. Toros Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. Neutral is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. Neutral is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi.
So let's dive into 2025. Somebody from your team shot me over a few stats, a bit of your year-over-year growth. So it looks like numbers grew massively in 2025. You had 100% increase in TVL revenue, trading volume. Is that like roughly correct, that snapshot? And maybe let's get your insight on how 2025 went for growth for Pendle.
Sure. So in short, like from numbers perspective, they've grown substantially. TVL grew from the peak of like 6.9 in 2024 to $13.4 billion in 2025. And then revenue, like from a swap fee perspective, it's also almost doubled. So in all, last year has worked out quite well for us. We made a very conscious effort to focus on enabling the stable coins and synthetic dollars, like just focusing on points of these forms of assets, and be really, really deliberate in identifying high quality assets and have them listed on Pendle. The other thing that was quite instrumental in enabling us to grow at that scale was the opening up of the protocol. So we were able to list assets much more quickly compared to 2024. So now, instead of us gatekeeping everything, we made the listing permissionless. As long as the team identifies themselves to us, fill up a form with like the basic information, we could get the market up fairly quickly, usually within a week. And then we also provide guidance, advice on how they can bootstrap liquidity. We also now have formulated have aggregated a group of liquidity providers who are always on the lookout for yield opportunities. And then whenever we have new and promising markets listed on Pendle, we would just promote them internally among these liquidity providers. So that helps accelerate this growth.
My initial reaction was thinking 2024 was so big due to the whole meta around being able to get exposure to a token pre-TGE through YTs. And I was frankly surprised that you grew that much in 2025 just because 2024 was so outrageous. So anyways, kudos on that. Why don't we talk though more about how do you make money? How does Pendle, the protocol, make money?
Sure. So Pendle, across the two products, we have like the revenue models fairly consistent. So there's always a swap fee component. Basically, whenever there's a trading activity, and like whenever user settles a trade, then there's a small fee that goes to the protocol, and then the other one is something like a settlement fee that is a clip on the TVL or open interest in the Boros, in the case of Boros. Yeah. So largely these two. So the reason why we wanted to have these two components as our revenue streams is so that we can benefit from, firstly, the growth in TVL, and secondly, with more trading activity, we can also benefit from facilitating transactions.
Okay, so follow up to that. I think a lot of our brains are still attuned sometime to looking at TVL and then making that the best kind of barometer for like how a protocol's doing. But with what you just said, it's almost like maybe volume is the bigger driver of what brings revenues to Pendle. Is that a fair statement?
So I'd say at this point in time, it's almost 50-50. So because right now, it used to be that TVL was the major contributor of revenue to the protocol. But now we are also making the liquidity work harder. So more transactions can take place through the AMM, and beyond that, it's also like the bigger quantum typically happens over the limit order already. So it's like basically with the same amount of liquidity, right? We were able to facilitate a bigger volume. All this contributed to the liquidity. Trading volume. But I think to your question, with every this is to the best of our ability by estimate. Every $1 billion in TVL translates to approximately $3 billion in revenue to the protocol. Annualized. So some months we have more TVL than others. This is to the best of our ability a very high level estimate.
I don't want to ignore all of the other money that Pendle is making for LPs and PT holders and folks that might hold a YT. Do you have any rough numbers on those? How much money was made in 2025, maybe by PT holders or LPs is a great way to obviously participate in Pendle. I personally really like the stablecoin related pools just because I think there's near zero impermanent loss if you participate in those. But yeah, anything there to share, Tien?
I don't have the exact breakdown of these, like the LP's earnings, but with respect to the amount of PT that we settle, as of last year, it was approximately $45 billion. So what that means is whenever there's maturity, in aggregate last year, approximately $45 billion was settled. Yeah, YT was just difficult because they're in points and a lot of them are not realized in tokens yet, so they are currently no price yet.
Yeah, a bit fugazi there, matching some of that stuff up. Time will tell. So you guys have a good internal dashboard that kind of tracks your revenue. We'll maybe flash that on the screen. It'll definitely be in the show notes. But I was taking a look at it before this call, and there was a period of time, I think, so it was October 2025, where it looked like one of your best months. So you brought in like $6.23 million, and obviously you can't just, ARR anything and project out, but that was like north of a $70 million run rate if you extrapolated. But the preceding months leading up to that, so you had 5 months of month-over-month growth from June 2025 all the way to October, where every month was just getting bigger and bigger and bigger. And then, okay, so it's looking at that chart, what I took away from it, it's like, okay, this is the October 10th, flash crash, basically. It was my analysis from what I saw there, because there was a pretty big drop off from October 2025. Is that what was a big factor? And I guess what I'm trying to ask too is how did that October 10th incident affect Pendle specifically? I'm imagining it was quite pronounced, but yeah.
Yeah. So you're right in that October 10th, that event was a major reason for why activity dropped from the peak. So as we observed, we were during that period when that incident actually happened, we were having we're just doing a team offsite, so we have a lot of discussion around that. But basically, our observation was that following the liquidation event, market became a lot more bearish. A lot of funds pulled liquidity out, try to rescue, secure their positions, whatever it is. And then as a result of that, just usually with a bearish sentiment, yield compresses across the board. And that also means that yield offerings on Pendle V2 became less attractive and less competitive as a result. So with lower APY, funds are less reluctant to, because there's not enough premium to justify that additional reward, that marginal reward. So funds would rather not put their money into DeFi protocols, maybe rotate it to some other segments that are performing better outside of crypto. So that was something that we speculated on. As of now, we're still trying to recover from the effect of the October incident. But I think over the course of the year, depending on catalyst events, I think we should see growth in the sector.
Yeah, this reflects my experience as an on-chain lender. I reacted to October 10th with, pulling my money from lots of different protocols. I was still farming a number of PTs, and at least a few of those I exited in profit and just thought, I can always come back to these. All of this is spooking me a bit. I'm a little bit worried about what else I don't understand in terms of the daisy chain of liquidations and blowups that was happening. So I do think what happened was ultimately healthy for the market. It sucks for people to lose money. I'm still not totally sure how much money was lost in the aftermath of October 10th, just in terms of the stream finance debacle and everyone that was affected beyond that. But I want to say it was maybe 500 million to upwards of $1 billion versus, whatever losses were incurred on centralized exchanges. But anyways, we're past that. I think the market has reset, and I do think we're in a healthier place than we were back in October. Speaking of market prices, the Pendle token is currently sitting at around $2 with a market cap of around $350 million. The fully diluted valuation is right around $586 million, with the all-time price of the token being around $7. So you had this VLOC mechanism for Pendle. We're understanding that is all about to change. Before we talk about the new mechanism, talk to us about what was wrong or what needed improvement with vePENDLE. The Mantle Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on Mantle's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow Mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. Decibel is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
So I look at this change. So basically, I think for context, right, we're going to transition away from vePENDLE to a new model called sPENDLE, which is a stake pendle, much simpler. But we can come to that. Now, to your question about our view on vePENDLE at this point in time, I just think that given our scale of operation and the current climate, VE model might not be the best model for us to continue to grow upward. It was helpful when we were trying to bootstrap liquidity, when we were operating at a smaller scale. But now that we are no longer just a new protocol, we figured that we had to change. So basically, I think of it like there were probably 3 different aspects of where we thought vePENDLE was inadequate in serving our current need. So firstly, vePENDLE was supposed to, like, one of the purposes of vePENDLE was for LP yield boosting. So if you have an LP position and if you max lock your vePENDLE, then you would have additional yield up to 2.5 times more than those who don't lock up, those who don't have vePENDLE positions. At the moment, we observe that vePENDLE holders, most of the TVL on Pendle now they don't have too much of an overlap with vePENDLE anymore. So the amount of people who max boost is actually quite insignificant. So that is not really a meaningful use of vePENDLE, just because people don't care anymore. And then a lot of times, that also translates to liquid lockers with nPendle, ePendle, and sDPendle in place. They're also not contributing too meaningfully from a TVL standpoint to the protocol. So we really think that the vePENDLE boosting makes too much of a sense at this point. Secondly, it's that part about voting. So protocol generates revenue, and then in the context of vePENDLE, all this revenue gets distributed back to the voters. If you vote correctly, then you get a very healthy APY. If you vote on the wrong pool, unfortunately, the return is going to be quite marginal. So that means every week, vePENDLE voting becomes somewhat of a prediction market. If you're good at it, you are bound to get very healthy return. If you're not so good at it, no matter how much vePENDLE you have, and you vote for a pool that generates, say, like $10, it's going to be very, very bad return for you. So we want to, we observe this to be definitely an avenue that can be improved, because we've also gotten quite a lot of feedback from users saying that they want that healthy APY, but they are not sure how to do with the votes. And then the other part is, like, because of vePENDLE voting, there's a bribing economy that happens around, like, the liquid lockers. So one thing that we thought needed significant improvement was actually on the incentive channeling, because the outcome of vote is the incentive to the respective pools. And we noticed that at one point in time, more than half of the incentive that we have on a weekly basis goes to the bottom 10% of the revenue, like fee generator to the protocol. So in other words, if we didn't need to incentivize these pools in the first place because they are not giving a lot of revenue to the protocol, that means we're not using the incentive appropriately to grow the protocol in trading activity or TVL. So this is one thing that we wanted to fix. And then, lastly, I think it's just complexity, right? Like with the vote, people just giving feedback that, it's not the most friendly. They just want stake, forget, and then be done with it.
Exactly. And like, kind of contextualizing all of this in this revenue meta aspect, what you just laid out and walked through, like you said, is a little complex. And I think you kind of created this almost hierarchical structure where a few people really tuned in were getting a lot of rewards, but then maybe some people that weren't really contributing to the protocol were also getting rewards. And I think what you're trying to create is more of like a flat structure where, hey, every participant just gets kind of like their equal share of the protocol's revenues going forward. So maybe that's the segue into sPENDLE. So we're going to go from vePENDLE to sPENDLE. Give us the breakdown on what sPENDLE is and what it'll do for accruing value to token holders.
Sure. So sPENDLE is short for like stake pendle. Functionally, it is a pretty straightforward, simple value accrual to the Pendle token. Now, in the past, when we have vePENDLE, the fees are distributed to the vePENDLE holders based on their voting outcome. Here, instead of distributing the fees that the protocol generate to the voters, with sPENDLE, that fee will be used to purchase Pendle, and then that would be the reward to the sPENDLE holders. Much simpler. And then on top of that, vePENDLE has a lock duration between 1 week and 2 years. Now with the change, the unstaking period is 14 days. So much more palatable for most people. And one other difference is that vePENDLE was previously, is as of now, vePENDLE is still non-transferable. So once you're locked in, that's pretty much it. And then you have to wait until your tenure is up before you can redeem for the underlying. But sPENDLE is going to be a fungible, transferable token. So it can potentially be used for various other DeFi use cases.
With sPENDLE, will we be able to potentially borrow against that then, considering the different DeFi use cases?
Yes.
Okay, that'll be very helpful. Yeah, that's very important to, I think, all of us as like long-term holders, being able to borrow against that. There's another detail here that we noticed in the existing vePENDLE dashboard. There are tokens that the protocol accrues by listing certain markets and, providing, liquidity for these different protocols, whether it's pre-TGE or post-TGE. I think Athena's been a major token that's been distributed through Pendle. What happens with those tokens? Like, does anything change there? How does the protocol handle that with sPENDLE holders?
Yeah, so that still goes to users, like sPENDLE holders in kind. We have no rights to liquidate these reward tokens into Pendle and distribute it to users. So that remains consistent. I do want to add something though. I just recalled because now we have because we've been distributing fees, protocol revenue to holders, right? Through vePENDLE and eventually with sPENDLE. So we intend to keep that revenue portion distributed to holders. However, the fees and revenues from Boros will be we're still undecided on what to do yet, because we recognize that basically the fees from Boros does not go directly to sPENDLE. It will stay within the protocol. We'll use it to reinvest in growth until we find meaningful product market fit. That will likely be the case. We just don't want to overcommit to a certain value accrual mechanism before we can generate revenue sustainably, and then before we generate meaningful amount of fees in order to either buy back or some other forms of value accrual back to the token.
I want to just a couple more things just on this sPENDLE and vePENDLE before we move on to a couple other questions. Something that I was curious. So actually myself as a market participant, I've always been eyeing up Pendle to buy, but part of the friction for me was that locking mechanism. I'm like, well, do I want to buy it? Because I don't want to lock it. But if I buy it, I should lock it. So I kind of always had this inner conflict, because I would feel like if I just bought naked Pendle, I wouldn't be getting the full extent and power of the vePENDLE side. So I think what you're doing with this 14-day, unwind, you're basically locking yourself into a 14-day decision versus a potentially 2-year decision, which I think makes that immediate decision so much easier. And I just think you're going to get way more uptake and really ownership of the token. And I guess my point in this was what was the percentage of locked Pendle that you got to? And then what do you foresee the percentage of sPENDLE that you'll get to? Have you kind of mapped that out yet?
Yeah. So as of now, probably as of last year, it was a bit more than 20% locked in vePENDLE. We suspect that with the transition from vePENDLE to sPENDLE, we might see the percentage increase from something like 23, 24% to potentially increase in like 50 to 100%. 100% would be extremely bullish, I believe. But 50 is probably a more likely outcome.
Tian, can you just walk me through what will the front end look like then for us if we want to stake Pendle? Like, just walk me through any other options or decisions we'll have in front of us. I come to the platform, I've got Pendle, I'm going to stake it. Is it now by default locked up for at a minimum of 14 days to unwind? And yeah, what other choices do I have here to, how else do I make the most of my sPENDLE?
That's right. So when you have Pendle, there's only an option to stake, right? So you stake it. If you want to unstake it, you can do so immediately, but that redemption, like that unstaking period, is 14 days. So in the meantime, once you stake, you're going to get, you stake Pendle, you get sPENDLE back. Your sPENDLE, if you don't mind waiting for 14 days, you can join the queue, or if you want to exit immediately, there is a secondary, like like you can sell it, secondary market.
Okay, switching gears here a little bit. I'm kind of curious how big the Pendle team is. Like, I really don't even have a benchmark for how many people it takes to run what you're doing. So I guess how big's the team now? And then I'm curious if you think you need to hire a bunch more people to achieve your goals, or if you're sort of at like a steady state these days.
Yeah, so we are now a little over 50 people. We have increased in like in the number of headcount more significantly in the last 6 months or so, because we were expecting more effort needed to operate like 2 products. And it's important that we segment out team members to focus specifically on V2 and Boros. Because like these 2 products are essential, they serve very different use cases, and we expect them to continue to grow potentially quite independently of each other. So V2 is more mature. A lot more effort is now on how we can refine the product UI UX, how we can find new category of markets to get in, to get involved in, and then more BD efforts. With respect to Boros, now it's still a lot more, like a lot more of our headcount is allotted to the risk, trading department, identifying like interesting data points that we can potentially focus on. For example, could there be new opportunities in equities, perps, or ideas of that sort? Just to help us get into get to like PMF. And then one other thing that we're doing now, that's also been contributing some traffic and trading activity to the Boros platform, is to facilitate some form of very basic form of OTC transactions, because people have come to us indicating interest to short rate. So we will help look for potential long interests and then just put them together to sort out the size as well as the rate, and have them settle on Boros.
Tian, is your customer base, do you think it's still heavily weighted to on-chain DeFi natives? And by the way, maybe I'm wrong on that, but I assume that was the bulk of folks that are using the platform. And if that's the case, I'm wondering, is the customer base shifting at all to institutional funds, or more of like the liquid on-chain funds? Basically, what's your target customer for 2026?
I want to say at this stage, like for the 2 products, they have pretty different profile of users. For Boros, because it's more mature now, it has handled some like pretty sizable amount of volume. The users are now becoming a lot more like they're not just DeFi degens. Proper institutional users are also using V2 to get their fixed rates sorted out, and then that at the same time created more opportunities for those smaller, sophisticated retail users to express a view on points. Boros is fairly new. Right now, we are seeing some of the V2 users starting to get involved in Boros, but I want to say at this point, it's still confined to the more sophisticated users. Typically, they work or they're affiliated with hedge funds or like the prop shops. They're perhaps trying out Boros, try to get a better view and try to seek alpha within that Boros instrument. And then if it does make sense to them, maybe they can deploy bigger capital into the platform and try to generate more wealth from like some of these new opportunities.
Maybe just sticking on this 2026 tangent, do you have any personal or any team internal goals of, hey, we want to hit this amount of TVL this year, or maybe it's, hey, revenue growth is our focus, or maybe it's volume? Also, like if you do, what do you need to do to achieve these goals for the protocols?
Puffer is building the ultimate vertical in crypto. Your crypto deserves better yields. Better yields require better infrastructure, and Puffer is building it. Puffer Liquid Staking delivers above-market ETH yields, secured with up to $5 billion in slashing penalty protection and buffer. Puffer Institutional offers compliant, secure, above-market ETH yields for DATs, institutions, and large players. Puffer Unify is the first synchronously composable rollup, enabling the next generation of app chains on Ethereum with sub-10 millisecond transactions. Unify AVS enables pre-confirmations, making Ethereum validators more profitable and rollups more scalable. Puffer is premier infrastructure and yield for digital assets. Stake your ETH at app.puffer.fi. Hey folks, I want to tell you about our sponsor Gearbox, the protocol that reimagines on-chain lending. With Gearbox, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about Gearbox, go to gearbox.fi. As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's Syrup USDC and Syrup USDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance.
Yeah, sure. So we have goals, but we'll keep them internal for now. What I can share with you is just like our overall plans. We like for V2, I think more of it is going to be, of course, like continuing to be very focused on stablecoins and synthetic dollar. We believe that the number of new assets in this segment of the market is not going to decrease. We identify real-world asset yield opportunities to be a new category that we need to get involved in. So if we want to get higher TVL compared to the year before, then we need to make sure we continue to stay relevant in the synthetic dollar stablecoin core. And then on top of that, we also need to start to get involved with the real asset operators. So these are the likes of Securitize, Centrifuge, and then the permissionless wrappers that help take the permission assets and make them permissionless. So these are different types of operators that we haven't had. We're still developing relationship with. Like we're connected, but now it's really figuring out a good go-to-market strategy to make sure like this sector that we want to get involved in become as big as possible. And then for Boros, now we're just starting to scale up operation, and open interest is looking pretty healthy at over 200 million. For this, I think the OTC is potentially one of the bigger growth driver for us. So we need to start to grow our user base by reaching out to them more directly. So a lot more BD efforts, less, I'd say like we will invest more in BD, maybe not so much on marketing, and just focus on one-on-one, more exclusive kind of relationship to build up that traction. Once it gets to, I'd say like 500 mil or $1 billion in OI, then we probably have to change our tactics a little bit. And in terms of these sectors we want to focus on, so we've been promoting cross-exchange arbitrage opportunities quite a fair bit. So it's really increasing the number of markets and the number of venues that we support on Boros, so that the cross-exchange arbitrage opportunities can be taken advantage of much more quickly on Boros. And equities perp could be a new segment that it's definitely a segment that we want to get involved in, but the scale of which I think can be much bigger than we currently estimate. I mean, we launched the NVIDIA market yesterday. What it does is, I think now there's a pretty interesting use case for like traders alike, right? They have the NVIDIA equity, they short the perp, and then with that funding rate, they lock in the funding rate on Boros. So that's perfect hedge. And that same strategy can be replicated to many other equities.
Oh yeah, that could definitely be a golden era for Boros potentially with all of these equities coming on chain. And just this, like, I honestly didn't know there was this big of an appetite for equities on chain, but the 24/7, 365 element, and then with leverage are just kind of total game changers. One other question, last question, you actually kind of answered it, but I just want to maybe get it a little bit more clear. I always kind of view Pendle as like a bit of a mini prediction market in a way, just because I think the things I see that are starting to pop off in Pendle, they're typically early. Like the LRT stuff was so early. I think a lot of the yield-bearing stablecoin stuff was really early. So because of that, I feel like whatever you guys are doing over there, you have a finger on the pulse of like the what's next for crypto. And you teased some of them in your answer, but maybe what sectors are you most excited for 2026? And again, I think you already went over a couple, but like what do you see being elevated on Pendle for 2026?
Yeah, I can be a bit more specific here. First thing is, I believe that rates trading can become much more mainstream. So that is where Boros is operating at. My view is that right now, like with many new asset, new markets, right? It's typically spot, and then you have like the perp market. So with Boros on top of perp, there can be a rates market. So it can all happen in fairly short period of time, almost in conjunction. Whenever a new asset gets launched or released, perp and rates market just show up almost quite instantly. So that aside, I think real world asset is also a sector that we're looking to get more involved in. But it's not just like, I think there's a sequence on how things can potentially play out. So a lot of the token issuers at this point issue permission assets, but a lot of DeFi protocols can only operate with permissionless asset. So there exists a gap here where certain protocols can potentially fill, right? Like I think there would very likely be stable coins that are backed by real asset yield. So that yield source real asset, but the stable coin can go about permissionlessly, or synthetic dollar go about permissionlessly, interact with protocols like Pendle or Aave. So we'll see more of that. And I also think if they don't exist in the form of synthetic dollars or stablecoin, then I think they can just be wrapped by an intermediary, so that the assets can go about permissionlessly, and interact with various DeFi protocols. So I think, so in terms of sequence, right? While real world asset is a very, very big category that eventually I think it will become more relevant in DeFi, I believe that from like sequentially, it will start with those operators that are filling the gap first. The ones that are trying to bridge the permission asset with permissionless protocols. Yeah. And then the one other sector that I'm very, very excited about is equities perp, because I think, like you said, it creates very different kind of value proposition to traders. And we want to be able to, with Boros, we want to be able to capitalize on that opportunity, that incoming opportunity, and do some great stuff there.
I know this is revenue meta, and I don't want to go into like our long form interviews, deep dives on Pendle and other protocols, but I feel like I'm doing a disservice if I don't ask a follow up here on Boros. So we're seeing all of these equities get launched as perps on chain, whether it's Ostium or Hyperliquid. And anyways, we're trying to pay attention to all the different opportunities there. Can you just dumb this down for me? We're likely going to see funds that are long, let's say NVIDIA, the stock, and then maybe they short the perp, and then they're potentially collecting the funding rate there if the funding rate is paying shorts, but let's pretend in this example that the funding rate is instead paying longs. Then would they be able to like take advantage of Boros to be able to basically hedge that out or be able to turn that into a profitable basis trade?
Yes. So if the funding rate is positive, then if the funding rate is in the negative territory, then it would make sense for users on Boros to long the rate when it's low. When they long the rate, they express a view firstly, and they're also at the same time locking in the funding rate that they would eventually pay. So they are not exposed to the funding rate volatility anymore. Because usually what happens is, let's say if the funding rate is low right now, if it goes up, then they might end up paying more. But if they long it at when the rate is low, then they don't have to worry about the fluctuation further down.
So cool. And yeah, that's even a better example. We've heard complaints or criticisms that these new equity perps on chain are really cool, but the problem is the funding rates can be outrageous. I think on some Hyperliquid market, NVIDIA, in order to long NVIDIA, it was like 35%. But if they use Boros, they could actually like lock in that funding rate and basically make that trade more profitable now using Boros.
That's right. Yeah. If the funding rate drops to, let's say, like 5%, and they can just lock it at 5%, even if it goes up to 40%, 50% in the next hour or so, it doesn't affect them.
So cool. And we all believe this is going to be a big theme in the new year. We're seeing all these different perps markets launch. We just saw, I think it's NVIDIA just launched through markets on Hyperliquid Nomadic. Is that correct today?
Tesla did. Tesla launched today.
Tesla just launched. So yeah, really, really promising what Boros could provide for more of the adoption of RWA perps in the new year. But guys, I think this is a great place for us to start to wrap up. So first, I want to remind our audience that they can learn more about Pendle by going to pendle.finance. They should follow Pendle on Twitter at pendle_fi. Tian, thanks so much for joining us. I want to give you the final word.
Yeah, no, thanks for having me. It's always a pleasure to be here. You guys always ask good questions, and you make me feel so welcome. So yeah, I truly appreciate that.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.